Investing in cryptocurrency can be both exciting and complex, requiring careful consideration, research, and risk management. Today, we're breaking down the essentials to help you get started and navigate the crypto world with confidence. Without wasting your time, let's jump straight into the video. First, what are cryptocurrencies? Cryptocurrencies are digital currencies protected by encryption, allowing for secure and transparent transactions without the control of a central authority such as a government or bank. Bitcoin and Ethereum are two of the most well-known examples. These digital currencies are based on blockchain technology, which is a decentralized ledger that records transactions across networks. Unlike traditional currencies like the US dollar, cryptocurrencies are decentralized, which means they exist outside of existing financial structures. As we mentioned earlier, there are different types of cryptocurrencies. First, there's Bitcoin, the first and most widely recognized cryptocurrency. Often referred to as digital gold, it boasts one of the highest market capitalizations. By the time of recording this video, Bitcoin is worth $69,500 with a market cap of $2.43 trillion. Then there's Ethereum. Known for enabling smart contracts and decentralized applications, also known as dApps, Ethereum is a platform with multiple use cases beyond simple transactions. By the time of recording this video, Ethereum is worth $2,500 with a market cap of $319 billion. Finally, there are other altcoins, or alternative coins. Thousands of these exist, including Binance Coin, or BNB, Cardano, known as ADA, and Solana, or SOL. Each offers unique features and use cases, but remember that altcoins can carry different levels of risk. And because of these risks, it's better to choose the best investment approach that fits your risk tolerance. Talking about investment approaches, the first option is direct purchase. Sign up on a cryptocurrency exchange like Coinbase, Binance, or Kraken, fund your account with fiat currency, and buy cryptocurrency directly. For added security, consider transferring your assets to a secure wallet. If you're interested in indirect methods, there are crypto-related stocks, ETFs, or exchange-traded funds, and financial products like Bitcoin futures or crypto trusts. These options allow you to benefit from the crypto market without directly purchasing the coins. When choosing an exchange, go for reputable options like Binance, Coinbase, Kraken, or Gemini. Check for features like security, transaction fees, ease of use, and local currency support. Don't forget to complete any necessary identity verification if the platform requires it. I will leave a link to those exchanges in the description below. You may check them after the video ends. After that, you may want to set your wallet. A hot wallet is an online wallet that is convenient but highly vulnerable to hackers. These are often available through exchanges. For higher security, consider a cold wallet, an offline storage option. Popular hardware wallets include Ledger and Trezor, which are excellent for long-term storage. The link to them will be in the description. After setting your wallet, you may want to decide on the investment amount and risk level that you are willing to risk. With crypto's high volatility, it's best to start small, especially if you're new. Decide whether you're interested in a long-term strategy, holding for years, or short-term trading to seek quicker gains. With that in mind, and once your account is set up and funded, it's time to buy. Choose the cryptocurrency you want and decide how much to invest. You can buy at the current market price or set a limit order if you want to buy at a specific price point. Talking of buying and setting up limit orders, this is a broad topic that requires its own video. If you are somebody interested in crypto and want to know more on how to buy and set limit orders, you may want to subscribe to the channel and turn on the notification bell so as you get notified when we upload that video. Remember to regularly track your portfolio and keep an eye on market trends or news. Consider strategies like profit-taking to lock in gains or stop-loss orders to limit losses, depending on your risk tolerance. The crypto landscape is constantly shifting. It's affected by regulatory changes, technology developments, and economic trends. Reliable sources like CoinDesk, Cointelegraph, and CryptoSlate can help you stay up to date. With all the fast changes in the crypto market, it's best to understand the risks. Crypto investing is unique, with potential threats from price volatility, security risks, and regulatory uncertainty. Use strong passwords, enable two-factor authentication, and beware of phishing scams. Only invest money you can afford to lose and diversify your portfolio. By following these steps and prioritizing informed decisions, you'll start your crypto journey on a solid foundation. The crypto world is fast-moving, so stay curious, cautious, and always ready to learn. And talking about crypto scams, this has been a problem that has affected both the professional investors and the beginner investors. Crypto scams may lead you to either lose your hard-earned capital or your crypto account. But lucky for you, I have created a video about crypto scams. Some of the crypto scams that you should avoid by all means. Some of the common red flags in crypto scams and how to avoid getting scammed. You may click the video in your screen right now if you want to save your capital and your crypto account. Thanks for watching. And if you found this guide helpful, don't forget to like and subscribe for more insights into the world of crypto and finance.